Today, we're doing a deep dive on Novo Nordisk, a powerhouse in diabetes and obesity treatment, exploring recent trends, earnings, expectations, and what's next. For decades, Novo Nordisk, the Danish pharmaceutical giant, has been synonymous with diabetes care. They built their empire on insulin and other diabetes treatments, earning a reputation for innovation and market dominance. But in recent years, their story has taken a dramatic turn, driven by a revolutionary class of drugs, the GLP-1 South. You've likely heard of their blockbuster medications, Ozempic and Wegovy, both containing semaglutide. These aren't just diabetes drugs anymore. They've become household names for their remarkable weight loss effects, transforming not only Novo Nordisk's trajectory, but also the global healthcare landscape. Beyond these stars, their portfolio includes other key brands like Victoza, Livmir, and Rybelsus, solidifying their position as a leader in metabolic disorders. But they're not resting on their laurels. Novo Nordisk is actively broadening its scope, eyeing a future where they address a wider range of chronic diseases. The weight loss boom, fueled by GLP-1 drugs, is truly unprecedented. This market, estimated at around $50 billion in 2024, is projected to skyrocket to an astonishing $150 billion by 2035. That's triple its current size in just over a decade. Novo Nordisk is at the forefront of this growth, and they know it. They're not just passively benefiting, they're actively shaping the future. Their pipeline is buzzing with activity, pushing the boundaries of GLP-1 technology. We're talking about next-generation, semaglutide analogs, like amycretin and CagriSema, which could offer even more potent effects or different administration methods. And critically, they're heavily invested in oral delivery formats, which would be a game-changer for patient convenience and adherence. Imagine a pill instead of an injection for your weight loss medication. That's the potential. Beyond their core diabetes and obesity focus, Novo Nordisk is strategically diverse. They're exploring treatments for cardiovascular disease, kidney disease, and heart-focused therapies, recognizing the interconnectedness of these conditions with metabolic health. This strategic expansion isn't just about R&D, it's backed by aggressive M&A activity. We've seen them acquire companies like Inversago and Embark, bringing in new expertise and promising compounds. And to keep up with the soaring demand, they're massively bolstering their production capacity, including the construction of a brand new plant in North Carolina. This isn't just about increasing supply, it's about securing their long-term dominance in a rapidly expanding market. Now, let's talk about their recent performance. Novo Nordisk's Q1 2025 results, released not too long ago, presented a mixed picture, sparking some cautious reactions from the market. While headline figures showed respectable growth, revenue up 18% year-over-year and pre-tax profit up 16%, in constant currency, a deeper dive revealed some underlying concerns. The most notable point of weakness was a 13% quarter-over-quarter drop in US sales of Wegovy. This was a significant deceleration for what has been a primary growth driver. The company attributed this slowdown, in part, to what they call compounding from pharmacies. For those unfamiliar, compounding pharmacies can create custom medications, and in the case of GLP-1 South, this means they can offer compounded versions of semaglutide, often at a lower cost, directly competing with branded products like Wegovy. This competitive pressure, combined with other market dynamics, led Novo Nordisk to reduce their full-year forecast. They now expect sales growth to be in the range of 13% to 21%, down from their previous guidance of 16% to 24%. Similarly, their operating profit forecast was trimmed to 16% to 24%, from an earlier 19% to 27%. This revision, though seemingly minor, signaled a more cautious outlook for management and was a key factor in the market's reaction. Adding to the market's unease was a significant leadership change. CEO Lars Fruergaard Jørgensen, who had steered the company through much of its GLP-1 ascent, exited his role. This departure came amidst the profits slowdown and, notably, increasing competition in the GLP-1 space. While the official reasons for such high-profile exits are often carefully worded, the timing certainly raised eyebrows among investors. A change in leadership, especially at the CEO level, can introduce uncertainty regarding future strategy and execution. The board's reaction and the implications of this leadership change on the company's ability to navigate competitive pressures and sustain growth will be critical for investors to monitor. This shakeup undoubtedly contributed to the stock's recent volatility. When we talk about the GLP-1 market, it's impossible not to mention Novo Nordisk's biggest rival, Eli Lilly. With its own formidable GLP-1 offerings like Mounjaro and the recently launched Zepbound for weight loss, is a fierce competitor. In fact, many analysts project that Lilly's Zepbound could potentially overtake Wegovy in terms of sales by as early as 2026. This isn't just about market share, it's about the very dynamic of the duopoly that currently dominates this space. Lilly's strong entry with Zepbound, which has shown impressive efficacy in trials, puts significant pressure on Novo Nordisk to innovate and maintain its competitive edge. The battle for market dominance isn't just about current products, it's about the future. This is where oral semaglutide comes into play. If Novo Nordisk can successfully bring a highly effective oral version of their GLP-1 drugs to market, it could be a game changer, potentially shifting dynamics significantly by offering a more convenient option for patients. However, Lilly is also developing its own oral GLP-1 south. So, the race is on. Beyond Lilly, we also have to consider the increasing threat from generic and compounded versions of these drugs. While legally distinct from branded medications, these alternatives can siphon off market share, especially for patients or payers seeking more affordable options. Understanding this complex competitive landscape is absolutely crucial for any investor. So, how are Wall Street analysts viewing Novo Nordisk after these developments? Despite the recent headwinds and the leadership change, the overall sentiment remains largely optimistic, albeit with some tempered expectations. Wall Street generally expects robust growth ahead, with projections for roughly 27% revenue growth and an impressive 30% EPS growth. Looking a bit further out, Simply Wealth's forecasts around 10.5% annual revenue growth and 12.8% EPS growth, with return on equity potentially reaching a remarkable 55% in 3 years. Now, let's talk price targets. These vary, but the consensus points to significant upside from current levels. TypeRanks has an average price target of $86.50, suggesting approximately 34% upside. With a high target reaching $102, MarketWatch presents a slightly higher average around $97.70, with a median of $97.06 and a bullish high of $140.19. Stock Analysis provides an even more optimistic average of $112, implying a substantial 73% upside, with a range spanning from $64 to $160. The consensus rating across these platforms is typically a moderate, by indicating a general bullish stance. The variance in these price targets often reflects differing levels of confidence in Novo Nordisk's pipeline, its ability to execute on its growth strategy, and how effectively it can fend off competitive pressures. Investors should understand that while analysts are generally positive, these targets are based on a range of assumptions that can change with new information. For investors considering Novo Nordisk, or those already holding shares, there are several key metrics and events that demand close attention. First and foremost, US Wegovy and Ozempic sales are your core revenue driver. We need to monitor how they perform in the coming quarters, particularly in light of the compounding competition and any broader slowdown in branded GLP-1 uptake. Are those US sales stabilizing or continuing to decline? Second, new CEO and management clarity. With the recent leadership change, we need to see stability and a clear strategic direction from the new executive team. Any further changes or lack of clear communication could create more uncertainty. Third, pipeline news, updates on oral semaglutide, positive trial data, regulatory filings, or even early commercialization news for these next-generation drugs could be significant catalysts. Conversely, any setbacks or delays would be a major concern. Fourth, guidance updates. Watch closely for any revisions to their full-year outlook. Ideally, we'd want to see them increase their forecasts back towards their original, more optimistic outlook, signaling confidence in their ability to overcome current challenges. Fifth, competition. Keep a close eye on Eli Lilly's product performance. Specifically, how are they gaining market share? Are there any new threats emerging from smaller biotech companies, or even new generic entrants? Sixth, M&A activity. Novo Nordisk has been acquisitive. Any further strategic acquisitions, particularly in cardiovascular or other obesity adjacent areas, could unlock new growth avenues. Seventh, production capacity and costs. The ability to consistently meet demand for their blockbuster drugs is paramount. Any supply chain issues, shortages, or unexpected increases in production costs could impact profitability. And finally, pricing pressures and regulation. The U.S. healthcare landscape is constantly scrutinizing drug prices. Any significant legislative or regulatory actions that could impact pricing for GLP-1 South would be a major headwind. Investing in any company carries risks, and Novo Nordisk is no exception. Let's outline some of the key risks and potential upside scenarios. On the risk side, pricing scrutiny is a constant threat. Particularly in the U.S., lawmakers and payers are increasingly vocal about the high cost of prescription drugs. And GLP-1 South, with their high demand, are often in the spotlight. Any mandated price reductions or increased rebates could significantly impact revenue and profitability. Next, compounded rivals and competitive encroachment. As we discussed, compounded versions of semaglutide are already impacting sales. If these compounded drugs gain more traction, or if other major pharmaceutical players successfully enter the market with highly effective and cheaper alternatives, Novo Nordisk's market share could erode faster than anticipated. Trial failures are an inherent risk in pharmaceutical development. If key pipeline assets like oral semaglutide or amycretin fail to meet endpoints in clinical trials, it would not only be a financial blow, but also severely impact future growth prospects and investor confidence. Now, for the upside scenarios. A major win for Novo Nordisk would be a successful launch of their oral GLP-1 drug. If it proves to be highly effective and widely adopted, it could dramatically expand the market and solidify Novo Nordisk's leadership by offering a more convenient option. Secondly, successful M&A activity could unlock new growth. If their acquisitions, particularly in areas like cardiovascular disease, yield blockbuster treatments, it could significantly diversify their revenue streams and reduce reliance on GLP-1 sales. Third, a market share rebound. If Novo Nordisk can effectively counter the compounded drug threat, potentially through expanded supply or strategic pricing, and if their marketing efforts for Wegovy resonate, we could see a rebound in US sales, which would be a strong positive signal. Considering these factors, the returns outlook for Novo Nordisk remains compelling, but with CagriSema forecasts imply earnings growth in the range of 12% to 30%, which is robust. However, investors must weigh these against the competitive pressures and execution challenges. In conclusion, Novo Nordisk remains a dominant force in the rapidly expanding GLP-1 market. Their core business in diabetes and obesity care is robust, supported by a strong pipeline, strategic acquisitions, and significant investments in manufacturing capacity. However, recent Q1 earnings showed some cracks, particularly with the deceleration of US Wegovy sales due to compounded competitors and led to a trimmed full-year forecast. The leadership change also adds an element of uncertainty. Despite these headwinds, analyst sentiment remains largely optimistic, with price targets ranging from $86 to $112, implying substantial upside from current levels, and a consensus moderate by rating. For investors, the key monitors going forward will be US-branded GLP-1 growth trends, updates on their oral semaglutide trials, and other pipeline readouts. The stability and strategic direction from the new management team, the evolving competitive positioning against Eli Lilly, and any regulatory or pricing actions that could impact their profitability. Here at the Investment Diary, our investment thesis on Novo Nordisk suggests that while the company faces real challenges, its long-term potential, driven by the massive GLP-1 market and its innovative pipeline, remains significant. However, close monitoring of Q2 sales figures, any further pipeline updates, and executive announcements will be absolutely critical. That's it for today's episode of the Investment Diary. If you enjoyed this deep dive into hit like, subscribe, and leave your comments. What do you think? Are you bullish, bearish, or sitting on the sidelines? Let us know your thoughts in the comments below. See you in the next diary.